Hello and welcome to episode 245 of the Money to the Masses podcast with your resident expert as always, Damien Fay, and me, Andy Leaks. Damien, how you doing?
I'm good to be back because I've been away this week. So
I've missed you.
I've missed you too. I've been to Portugal, and the reason I mention it is because the podcast this week is going to be all about the reason I went there, which is an event called Web Summit. And it is the great and good of the internet go to a 3-day extravaganza, a concert, or not a conference really, where they do speaking, they do events, show you what's going on in the tech world. So I've been doing that for 3 days, and I've just got back. And with the it's not a jolly, it's work, because we're going to see where, for me particularly, where financial technology, fintech, is going. So I'm going to tell you today about that. So it's been quite tiring. I've just got back, literally in the office. First time I've seen Andy all week, and it's Friday about 2:00 in the afternoon. So yeah, after this, I think I'm going to be done this week. Oh no, we're going out, aren't we, Andy? We're going to meet you all in the pub later on, which I'm quite excited about as well.
Yeah, so when you listen to this, you will have already met us and had a drink with us, and then possibly be listening to this after. So it's all about
and watched Andy carry me back out of the pub.
The magic of editing. Right, so you mentioned about the conference that you went to. Genuinely, I have missed you this week, but I know you've been doing lots of good stuff, and you've got lots of stuff to share.
So a big thing at Money to the Masses is that we want to be at the forefront of what's going on in the tech world. So if you think about Money to the Masses as an entity, as a concept, it is at that forefront. So we produce content for free, people engage with it. We created Damien's Money MOT, 80/20 Investor, all these things that the world of finance hasn't been doing or still isn't doing yet. So giving away information, knowledge and expertise. And we're doing it in increasingly diverse ways. So as I say, this podcast is one. We've been doing this podcast now, I think, for 5-6 years, Andy.
Yep.
And we're one of the longest running podcasts going in the money space. So we're always trying to push boundaries, because in doing so, it helps push out the brand, what we're trying to achieve, trying to help people with their finances. And so it's always good to see where the next trend is. What's the next thing we can help people with, how we can get out there and, in a way, disrupt what's going on, disrupt the status quo of the large banks and financial entities who just overcharge people and do the old method of, I'm not going to tell you anything until you pay me a fortune. So go into things like Web Summit. What you do is you can go and see what's going on across a range of industries. Now, there's a real key concept to a lot of what we do at Money to the Masses is diversity. So it's diversity of people, but importantly, diversity of thought. So in order to solve a problem like a lack of financial education, or like I said, the status quo at the moment, or the advice gap where people can't afford financial advice, then an important way to try and tackle that problem is to do it in a different way. So that means not trying to do it the same way it's been done before. So that's why you get that diversity of thought. So it's no coincidence that the people who work within Money to the Masses have a diverse background, and particularly in their careers. So Justin in particular never worked in the world of finance. So you get the views and opinions and ways to solve problems that come from different industries. And one of the big industries that you get a lot of influence from is the car industry, or other industries where there are considered purchases. So it's always interesting to go and look at what's going on in other industries out there, what's going on in technology generally, and also, more importantly, what people are experiencing in other products that they use online. They will eventually expect that of the financial products that they use, or the financial services that they use. And so you have to look at where those trends are going. So if you're thinking about Netflix and all those types of content and the way they're delivered and their charging structures, it's no coincidence that you start hearing things like Netflix pricing in the financial world, because what they start to look at is what people are happy with in certain areas of their world in technology. They then try to bring it to finance. So it's important. The message is it's important to go and see what's going on around the finance world and basically what could be coming in the future. So this podcast episode, I just want to talk about some of the fintech stuff that's quite exciting in the coming years, where financial technology could innovate, the pros and the cons as I see them. So we're talking artificial intelligence, we're talking Libra, Facebook's cryptocurrency, and we're talking about all sorts of things to do with Alexa. So we're going to start the conversation and we'll pick it up as we go along. But when I went to the conference, to give people an understanding of how it works, there are 70,000 people there. There were probably, I don't know how many hundred speakers and actual events, how many people are exhibiting their wares. It's one of these places you walk around, there's robots sort of patrolling and doing odd things, cooking sushi, I think one was. So it's all that kind of stuff. And the fintech world was represented by the likes of Revolut, Starling was there, Go Compare, the comparison site, they were there on the talk, quite interesting. So there's a few others as well. But one of the big things in technology and finance that we're going to see now is this idea of self-driving money. Now, apparently that term has been protected. It's under copyright. Somebody's already got it. The idea of self-driving money. And all that is an automated way of doing things. So I've believed this for a long time, and it's part of the reason why Damien's Money MOT came into existence, because people want solutions. They don't always want to read about the solution or the problem. They sometimes want to be taken to a solution relatively quickly. So they want the solution and a theory later. And that's what Damien's Money MOT did. One of the things I did work out from going to the conference is how forward thinking that we are. So patting ourselves on the back. The people trying to
we as in money to the masses, or we as a people?
We as a money to the masses. Right. So the Damien's Money MOT, where you can get a financial health check and it can prioritise things you need to do across a whole range of areas in your finances. People are only just really starting to think about doing that, and we're talking about the top brands that are starting to try and create their own versions. And the interesting part is artificial intelligence. We talk about it in the office quite a bit, and Justin's quite obsessed with it because he sees the potential of what this could do for personal finance. And it's already starting to be integrated in the world of finance, and people won't realise quite how it will impact it. But on the self-driving money front, there was an interesting talk by Go Compare. They were part of a panel discussion. Now, Go Compare are a comparison site in the UK. The model of a comparison site is to spend loads of money, marketing money, to get you to go to their site to fill in a really long form that will go away to insurers to give you a cheap car insurance quote. And there could be up to 50 questions on there. And you do that time and time again. And now Go Compare actually made some quite good points that only 1 in 5 people will do that. And so they're servicing a fifth of the marketplace out there, but the sorts of people who are quite happy to keep filling in forms. Lots of people don't want to. So they realise this is a problem. They also spend 55% of their revenue on marketing. So it's an expensive business. And you may not know, but there was a energy switching company out there called Look After My Bills, which was one of the most successful pitches on Dragon's Den. And they won a load of money a number of years ago to push forward with their idea. Now, Go Compare bought them earlier this year. And the reason they said they did that is because they wanted to get into trying to solve this problem of the other 4/5 of the population who aren't engaging with comparison sites. In my view, the reality is that the comparison world is going to struggle going forward, because where the future lies in technology and finance is that open banking has now allowed it so that services can talk directly to people's bank accounts. And where we're going to be in the not too distant future, and it already exists to a certain extent, is that you could be in your native bank. So we're not saying you've got to open up a Monzo or Starling or anything like that. You could be with your existing bank, and in their app, you will be able to then access services. But what will happen is somebody like Go Compare will, through these APIs, these data channels, will analyse your spending, will take data from your bank accounts and things like that about the things that you do and the things and the bills you've got, and then do comparisons for you without you having to do all that data filling, so those form filling. And then they'll recommend products, and of course, therefore, they will make money from doing that, or there'll be some sort of revenue share with the bank. And Go Compare divulge that they're already in a beta testing phase of this. And the only problem with it is that banks move quite slowly. The big banks do, so they're not the biggest innovators. So my view for a long time has been that this is where we're going to go. And listening to various people within the conference, we are definitely going there. But there's going to be an overlay of artificial intelligence on that as well. Because if you think about artificial intelligence, what it could do is it could start making personalised product recommendations. It can start looking at people like you. It could predict patterns of behaviour to provide you with solutions that you didn't know that you needed by looking at huge volumes of data rather than just your own data. So rather than just what you do, it could look at what across a whole swathe of information for millions of people, and therefore learn from that and constantly learn and try and get to this idea of optimizing your finances. Damien's MOT Money MOT is built on that concept. So it is a idea of trying to optimize what you do. And it's free to use. People know it only takes 2 minutes, and you can get a plan at the end that will help you optimize. Where we are going to go is where you theoretically could optimize your finances without doing anything. It happens through your bank because they'll tie up with the price comparison sites. The reality is the price comparison sites are running scared because they realise that the market share that the people like Look After My Bills and that were taken by just people going, do you know what? You auto switch my services, Look After My Bills. I want you to do it because I can't be bothered doing this every year. That it was swallowing up a portion of their revenue. So they went and acquired them. And this is my view, that they acquired them as a defensive tactic because that is where the market is heading in time. So that's not saying that's where that everybody will like that. A lot of people won't like the idea of their data being shared around the place, but it's where we could get to. If you imagine where I personally view the future is at some point you could have a button within an app, let's say your banking app, that just says optimize, and they would try and optimize or maximize your finances by looking at all your bills, your usages, and through data sharing, then cut down money and look at things to perhaps make recommendations on mortgages and all sorts of things to make it better. And lots of people would like that. And there was a really interesting point that it depends on your age as well. So some people go, I don't want to be involved. I don't want that kind of thing happening. I don't want that data sharing. Now, going forward, the younger generation are less obsessed with the technology, more obsessed with the outcome. So they are what they call digital natives. They were born in a world where the internet existed, where apps already existed. They just see the technology was always there. They didn't know a world where there wasn't an iPhone. They didn't know a world where there wasn't the internet like we all do. So we are obsessed with the technology because we sit there and go, wow, look how that works and what is it doing? Whereas as we go further forward into the future, there'll be the younger generations won't care so much about what the technology is doing, it's what it's achieving. So we are going to head that way. There will be people who won't want to do it, won't allow sort of AI or open banking to suck down all their data. But this is where we're going to go. And it's the optimization of money through technology is where we're going to head to.
One of the questions I have surrounding that AI type thing, one thing that I find frustrating about, say, Facebook or Netflix is I get stuck in a loop. If I start watching, I don't know, let's say a particular style of documentary, suddenly AI kicks in and thinks, well, this guy loves documentaries and we'll just chuck documentary after documentary. And sometimes I want to watch a cat video. And I wonder how these technologies can help. I know they can look at past. I know they can look at other people. But I just worry sometimes that they just chuck what they see rather than what they think you might want to see.
Yeah, and I mean, you've hit upon a limitation of artificial intelligence. And a number of years ago, I went to the same conference and Facebook did a presentation about artificial intelligence where it was then. And this is 3 years ago. So we've moved on leaps and bounds since that point. And there was a famous picture where there was a jumbo jet flying over it wasn't actually flying over the motorway, it was crashing over the top of the motorway. And so you may have seen it. It's at like a very odd angle and it looks like it's about to take the top off of the car in front of the car that's taken the dash cam image. And artificial intelligence, when they were categorized what the picture was, so they had a program that was categorizing pictures for us because that'd be incredibly useful. Because if you think about the internet as it exists, it's just words and data. Images are difficult to categorize. You quite often need a human interpretation of what an image is, which is why when you get those capture forms come up, when you go on somewhere and they go to prove you're human, they ask you to click all the images of a bike in. It's because computers find it hard to replicate. And we are still at that point. But in this image, where the plane was crashing above a motorway, the artificial intelligence deemed it was a picture of a plane standing on a runway. Right. So taxiing. It couldn't tarmac plane. Yeah, okay, this is based on the experience it had of images of planes above tarmac. And there is a very interesting issue about artificial intelligence. So we've got artificial intelligence could give us personalized products, personalized recommendations. It could make things cheaper. So if we think about financial advice, we could get optimized decisions on financial advice, possibly, and it could make it cheaper. The problem with artificial intelligence is what you've hit on, is that it's limited by the data that's put in it. Now, there was a experiment or bit of research that was done using artificial intelligence to try and make American police forces better. And the optimum decision that this artificial intelligence came out with about how the police force could improve and catch more people, the solution was to stop and search and arrest more young black people. Because what the data was doing, it was taking an already inherently racist approach to policing, and that was saying, well, that had the biggest rate of catching criminals, but it was skewed. So it was already massively skewed data because they were already basically racially profiling people incorrectly in a lot of cases, just targeting black people. So the artificial intelligence was racist. And that is the problem we're going to have with finance as well, because where we could get to is the artificial intelligence is going to have a very big impact in the insurance world and the underwriting world. So they kind of go hand in hand, but also in the lending world. Because what artificial intelligence could do is, in theory, it could have all your data. So if you imagine all your APIs, so all that data on open banking is all linked up. And by the way, one of the views that I do share actually is that some of the massive big tech, they call them, so Facebook, Google, Amazon, all those people are going to probably be forced at some point to share data because they've got an almost, not quite a monopoly, but they've got, is it I can never say the word, oligopoly of data. They are dominant in that sector.
I can't help you out with that word. That's the first time I've heard
everyone's, it's where you've got a number of large players.
Yeah.
And so in order to break that, you're going to have to make them share that data. Mm-hmm. So all that data that's captured is going to be potentially available, but it'd be available to an underwriter. So what you could get is a case where you would be refused credit or a mortgage or anything immediately, because as soon as you're going to apply for it, the AI has already profiled you and won't lend to you.
Potentially based on just things like search results.
It could be search results. It could be looking at your spending patterns, because there is elements where we submit spending patterns to our mortgage brokers.
Yeah. But
artificial intelligence could look at the way you spend, the way you behave, and they could put you down and judge you as a risk. So in risk assessment, artificial intelligence can be incredibly powerful for the people who are trying to reduce risk. So that is lenders and that is insurers. And by doing so, they could therefore exclude people who make better judgments and more profitable judgments. The issue with that, though, is that people could be excluded. So certain amounts of social exclusion could be exaggerated. So you imagine that there'll be people out there who could become uninsurable. At the moment, the way the insurance world works is something called risk pooling. So they don't underwrite everybody in an individual way. There is taken as a round, isn't there, about the amount of insurance risk they have on their book. So when an insurance company does a bit of risk profiling, they don't look at every nuance of you. They take a lot of data and they place it amongst that risk pooling, and there's an element of offsetting in the premiums. If we were all individually underwritten, so it was very unique, what would happen is the people who are very high risk would pay really, really high premiums or not be insured at all. With risk pooling at the moment, what happens is people who are low risk, in a way, fund some of the premiums of the high risk. And it just means everybody can get insured. And I know you might think, well, if you're low risk, why would you pay for everybody else? But the problem is that, let's imagine there's a hurricane that wipes out certain houses and you live in a certain area, or flooding that's more relevant to the UK. What would happen is there would be a group of people who therefore would suffer, and somewhere along the line they're going to have to be helped by somebody. The addition of a premium on somebody who's on low risk could help offset that. Yeah. Otherwise, what would happen if they can't get insurance? Then the state would have to help them. And so insurance pooling risk pooling is important. It makes the industry work as it currently does. And for insurers, though, individual underwriting would be brilliant. It'd be really profitable for them.
So if they eradicated that sort of risk pooling situation by doing this individual underwriting, would you see cheaper premiums at the bottom end, do you think? Or do you think they'd just increase their profits as a result? Or a mixture of both?
Well, you probably see a mixture of both. But you think about it, insurance companies aren't charities. They're there to make a profit. And the more information they have about us, the more nuance they can get about the whether they want to insure us. With lending, that could be quite problematic. So you could have people who will never be able to get onto the property ladder because the AI deems them a risk. It'd be that classic, the computer says no.
Yeah.
And they won't be able to understand why they've been rejected. Now, under GDPR rules, you are supposed to be able to challenge any decision. But you've got a robot that's making decisions. You've got an artificial intelligence that's learning. And what can happen with artificial intelligence, you still get bad learning. And so it could cause this to be exaggerated, this pattern. Now, I know people think I'm sounding like I'm being negative about it. Don't get me wrong. I think it's incredibly powerful. I mean, we could, for the advice world, we're already seeing companies who use it. There's a company called MyEver that's launched that's trying to do artificial intelligence with advice. So it's like a mass market. Nutmeg are trying to experiment to see if they can use it. So there is mass positives because we've got to try and fill that advice gap, which in a way we do as well, or we help people. But being able to get regulated financial advice, so you get recommended an individual, say, fund or product, and it's a regulated piece of advice, but it's done by artificial intelligence. That'd be great for the larger market. Of course, the problem we've got is that people don't understand at the moment what is regulated, what isn't, and also what advice they're getting. So there's a lot of the robo advice firms that aren't really, they're not artificial intelligence, but some of them are just glorified execution only services. So it's not advice, whereas others are regulated advice. And there's that grey area that we've got that's going to have compliance got to get involved in, which we can come back to. One interesting element before I move on from AI is that what you will see is you're going to see in a not too distant future artificial characters. So it's called synthetics. So you're going to see, let's take me, for example. You imagine if there was a me, if you may have heard of deep fakes. Mm-hmm. So you know that thing where they get Barack Obama and then they use computer technology to make it look exactly like he has just said this tirade of abuse or something like that by using technology. And to anybody, the normal person, they can't discern or determine that wasn't him actually saying that. And they can do it from a photo, and it's quite scary. It's frightening. They can take anybody's face and pretty much make them do anything, and people would believe that they were. So that's frightening. But if you take it from a positive point of view, what you could have is you could have a person, say me, and you had 1 million people want to ask me a question. You could create a synthetic artificial intelligence that would be the form of me, it would look like me, it would be a character on the screen, and they would then use my voice, and then they could answer people's questions based on the content that we write. And so people engage with it. Now, there is a company, I saw it actually, an American car company, that there's an image, it looks like a normal woman, sort of a normal person. And then she starts talking to you about the car you've selected on the screen. But they can change anything she says without having to re-record the footage because they're using this technology, the synthetics, whereby you've got this artificial intelligence character, if in a sense, that can talk about things. So it's not quite artificial intelligence, more synthetics, but we're going to get into that world, and that can get smarter and learn. And apparently I think it's in Japan, one of the biggest TV shows out there is a TV show that's got a mixture of these sort of synthetic people and real people interacting. So that's where we're going to get to in a not too distant future, where chatbots are going to be a little bit more than just a piece of code which is really clunky. You could be a real person that it looks like you're talking to them and you're conversing. Wow. So we're going to go down that road. Now, one of the other things is that slight problem is the lack of empathy that it will have, and they've got to try and overcome that. And that's why technology won't take over the world. So if you're a financial advisor listening to this, I sincerely have not seen anything yet, even at this conference, that will suggest that the financial advice world will disappear. Yes, you will lose a lot of the business that could be automated. A lot of financial advice can be automated.
That's already happening now, right?
It's already happening. The direction of travel is already set. Where you will be is you will be the pilot in a driverless Uber who doesn't do a lot but just stops it crashing. Yeah. That's what I think financial advice will be, or the high level advice that is nuanced.
And that's your chauffeur or your...
yeah, exactly. It's a person who's going to end up, they need a little bit more human element. Yeah, but also it's empathy. Empathy is one thing that computers can't do. And so the idea of artificial intelligence helping people with money, and as soon as they look at their bank account, it turns around and says, yep, you shouldn't have done X, Y, Z. There's not empathy there. That person would get irritated, whereas a human would look at something and realise what to say and what not to say. And that's an important part.
There are quite a lot of humans that haven't got that as well, though, I have to add.
Well, as you say that, when I got on the plane, a brilliant example of that. The lady got on and they were just about to close the doors and she had her bag. And it was an EasyJet flight, so you know what it's like. You get on, everyone takes their luggage. They don't want to put it in the hold. And she couldn't get her bag in. And his answer to her when he was trying to solve the problem was, this is the air steward. He said, it's times like these that I tend to remind people about the importance of being punctual. Ooh. Now, wow. Admittedly, she didn't take it very well. She did take it quite calmly, but that would be the sort of thing that artificial intelligence at the moment would do. It would just tell you something that it thought was useful, not what you want to hear. So, so there is the empathy problem. Now, one of the areas that we'll touch upon is augmented reality. Now, you know what augmented reality is? It's basically like virtual reality, but with the real world coming in. Now, that could happen. There's talk of them trying to recreate bank branches by using augmented reality. I'm not sure personally that I see that would actually happen or be of benefit, but it's one way. Now, the other thing is there's going to be some disruption coming, and it's big tech. So big tech versus fintech. That's Apple and Facebook, Amazon versus the already existing fintechs that are out there. And if you think about it, they can come through the sort of side door, back door, because they've got access to people or community that use iPhones, for example. So Apple Card that's launching over here in a not too distant future. If you want to know more about it, we've got an article on the Money to the Masses website. But they can immediately enter a market and disrupt it. And Google did try to do that a number of years ago. They bought a price comparison website and tried to enter the market and it didn't work. I think they will try it again. The various people who I saw at Scumber Talks, they wouldn't. The one issue they will have, which was raised, is whether they'll be allowed to. And that's because they could be too powerful if they enter a market. Now, there was a lot of talk about Facebook and Libra. And I just want to touch upon that because Libra is their cryptocurrency they want to create. There's a number of payment companies that all came together that are going to be the backing of this new Facebook currency. And the idea that people could use a non-centralized currency, so it's not under the laws of a particular government or central bank. It's its own entity, borderless, can be used to make transactions anywhere. Sounds quite good, to be honest, because you could pay people through WhatsApp and Facebook and stuff like that. Now, there were some people on these panels who thought it's going to be the next big thing. They think it will work despite the setbacks they've had recently with some of the backers pulling out. But I was doing quite a bit of digging around and research on it while I was there. And there is an issue that I just want to make people aware of. When people go on about their Facebook and their currency and all this is going to be the next big thing. And it's really about how currencies work and the problem that could come with it. It's just a bit of food for thought. When Facebook wants to launch a currency, what they will do, they're going to try and back it with assets. So that will probably be a basket of currencies, other currencies out there. So it's got some intrinsic value. What that means is that Facebook would start to acquire assets. It could be government bonds. It could be various different investments in effectively a wealth fund. And if you imagine if every Facebook user and WhatsApp user out there and Instagram users converted, let's just imagine it, and I think that's about 3 billion people started using that currency. The assets, the wealth fund that would be backing this currency would be the biggest wealth fund in the history of the planet. It would be bigger than any of the sovereign wealth funds you see in some of the oil-rich states, countries, I should say. It would be so powerful that they could theoretically dictate to governments what to do. Because the reason that could happen is if a company uses a domestic currency, that government has an element of control over that company. And if it doesn't use their currency, then it doesn't have that control. The problem comes when you have a company, essentially, whether it's the collective that decides that is running a currency, it no longer is at the whim of a government. In fact, what would happen is it would acquire the power to tell governments what to do. Already you have companies, like banking, or it could be car manufacturing, that lobby governments and try and get them to do what they want to do. That already exists. And you've even got things where you have investment banks sell down assets, that they have big pools of assets and they sell them because it might push down the value of, or might increase lending in a particular country or something like that. Basically, they got a political clout. They try and do it to give some sway. If Facebook was that big, that its currency had that big a reserve, it could not only bankrupt any competitor or company it didn't like, it could, if somebody didn't want to use their currency, it could exclude them from the global financial markets. But it could also bankrupt a country. It would be bigger than the US Federal Reserve. That means the US Federal Reserve, the central bank, the most important central bank in the world, would no longer have any control over its own economy. Facebook could, if it wanted to, crash their economy if it decided it wanted to do it. It would be able to, by selling down these assets, by buying assets or, like I say, selling things, it can start to threaten to do it. It can manipulate things. It could just, because it didn't like something, it could change it. And so therefore Facebook would become so powerful that we could end up having countries where, let's say there was a country that didn't want to bend to the group, the Facebook, whoever's in charge of the currency, whatever their will was, they could suddenly overnight spike inflation. Or they could lock down that country so people couldn't trade with each other. You could have more social exclusion because they become too powerful. Now, I'm not saying that's in Facebook's agenda. I'm just saying the theory is that if we got to there, this isn't all the sunlit uplands that people think. What you've done is you've replaced an elected body, so a government, that can control what companies do, and it can have a certain say over what goes on in its economy. You would replace it with an unelected collective company, or whatever you want to call it, that would have absolute control over everything that you do. Why would you want that?
You just have to make sure Merkel was like an administrator, and you make sure you have moderators and stuff from government.
But that's the problem, that they would, and so it's
really
just
bizarre.
a bit of food for thought that when people talk about all this stuff and they want to take over the world of these countries, that's part of the attractiveness of doing so. Now, Facebook are struggling with it. There are some people who think they won't even get it off the ground now, but we'll have to see. Interestingly, the singer Akon, you know Akon, that locks up?
Yeah.
He's a fascinating character. I saw him do a talk, be interviewed at that conference. And he has used his fame and money and influence to launch not only utility companies in Africa, in 17 countries, but one in America, but he's also launched a cryptocurrency called Acoin, which is
I see what he did there.
yeah, to try and give an independent currency for the whole of Africa. So that was quite interesting. I mean, whether he will achieve it, he's making strides in doing so. So again, it shows where we are going with all of this. There's a lot of people out there trying to innovate. Some of it will fail. The idea of a cashless society, I want to just quickly touch upon that. You read a lot of it at the moment in the press. We're going to be cashless and the death of cash. One of the issues you've got is that there's a lot of people out there who still use cash, and we're talking globally. And one of the biggest issues companies have, when you get a company the size of Amazon or eBay, one of the biggest issues they have is allowing people to pay for products in the currency or the way they want to. And the demand for cryptocurrencies is almost negligible. The problem with a crypto is that its value fluctuates so much that it almost makes it useless when trying to buy a fixed asset of some kind. So their biggest issue is trying to allow people to buy in local currencies and do that in an affordable way and an easy way. And even there's some societies that are almost still cash, China for example, they have to work out ways of allowing them to transact online, and that is cash on delivery is one way they actually do that in China. So the idea that we're going to go cashless is some way off, because there is still a demand for cash and there's still a massive demand for cards, because people still store their wealth in bank accounts. The thing with Libra, one of the best quotes I heard was that was solving a solution for a problem that didn't really exist. And so that is one of the reasons why it might not take off, at least in the short term. One of the next big frontiers in fintech is going to be the servicing of the people who don't have bank accounts. So they would call them the unbanked, to use a term. Those people who are, for whatever reason, excluded or are not part of the mainstream banking industry, of which there are a lot around the world, financial technology needs to find a way of engaging them. And so therefore, the solutions we've seen now might not be the ones that will actually tap into that potential. So that is going to be a major new growth area. In terms of the next thing you're going to see probably in the next year, what the trends, probably a movement more of some of the startup banks, the technology banks, the likes of Starling, Monzo, potentially becoming the primary bank account for people. Because at the moment they aren't. So there are people who use them, but they won't necessarily be the account they pay their bills in or they pay their money into, their wages. So using them as a primary bank account, that will likely start to increase. And if that does, and that makes the adoption of these banks, they start to become much bigger players in the high street.
Does that mean I'm ahead of the curve?
If you are,
because I use it as my bank account.
Yeah, so you are. But they're trying to convince more and more people to do so. So that's going to be an interesting area. And for the investment bankers out there, that's another area under threat. They think that no one's tried to get rid of an investment bank. They're not trying to do what JP Morgan does. And so they could do so at a low cost, and somebody at some point will try and take them on. And that will be quite interesting. The other thing you're going to probably see in the fintech space in the next year or two is a lot of consolidation. There are going to be people buying some of these banks, these startup banks, these digital-only banks, because they have great customer engagement and loyalty. But give you an example, it was announced that JP Morgan spends about 20 billion a year on technology. Now, if that figure is true, then why would they not go and buy a fintech company? And I think in the long run, you're going to start getting that. And I do think some of these digital banks are being built to be sold. And that, I think we're going to see a lot more of fintechs being acquired by some of the traditional financial institutions. And the other thing I'd want to finish on is Alexa. Now, I think Alexa and voice is going to be big in financial technology. So we've had banks already trial it over here. I think NatWest trialed it, where you could talk to your Alexa and ask for your balance and things like that, some simple stuff. That is brilliant in my view for social inclusion. People who have some physical impairment or disability or not be able to get out are able to engage with their finances. That should be applauded. The issue they found, I think, was that people weren't comfortable with their Alexa talking about their finances to a room of people potentially. And that is just
that's called being British, isn't it?
I think that's called being British. And I think it's also, you'd have to use it within in the right environment. And there is talk of pulling all that back now. They didn't think people really wanted it. I think we will get there. But the other thing is voice technology is going to increase, and you're going to talk more to financial institutions and all entities via voice search and voice technology, because it's going to be one of the most prevalent forms. If you think of the millions and millions of Alexas, iPhones that are in people's pockets or houses that have a form or enable voice search, then people are going to want to talk to brands. And one of the most powerful things I heard out there was that they would say, you're going to get to a point where people are going to actually talk to a brand and ask Alexa, what are they doing to tackle climate change? And the people using that kind of technology are going to want an answer. So brands have to start preparing that and deciding what that answer is.
You just said the word there, and anyone playing this podcast out at home, their Alexa's going to be going mad. So they've got you to thank.
Yeah, so if when we get to the theme tune, I'm going to say Alexa 10, and then it'll go up and blow the speaker.
Yeah. Does it do that? Can you change the volume?
I think so. My daughter always tells me it's done on a number 1 to 10, so there you go.
There you go. Right, so have we done this one?
We are done. I could have gone on forever talking about what's going to happen in fintech. The positive is there's never been a better time for sorting your finances. Technology helps us. There's lots of great technology out there. We review loads of it online. Yeah. Go to Money to the Masses. If you search for a review, you'll see lots of reviews we do, particularly apps, financial platforms, brokers, all those things. There's lots out there. Damien's Money MOT. Go and have a look at that. That's about the best out there. I'm not just saying it because I'm biased. I am biased. But because of these things that I go to, I look at where the world's going. We're already planning for the next wave of new things we're going to do with technology, which is going to be exciting. And the whole purpose is to make people engage with their finances. So it's never been a better time. There could be drawbacks, but in the future, when people misuse technology or if we don't learn from the mistakes we made in the past, but if we get the right people developing, then everything should be positive.
And actually, people have been in touch with us before, asking how they can support us. Well, one way you can support us is by reading our articles, spreading the love, telling people about what we do. Because the more people that read what we do, the more the word is spread and the more we can write and help other people. So do that. In fact, in the Facebook group this week, we'll pop a couple of articles which are kind of around the subject of what we've been talking about today for people to discuss. So those that aren't already in the Facebook group, do get involved. It's facebook.com/groups/money to the masses. And we'll invite you straight into the group and you can start chatting to us. So that's it. We're all done for this week. Until next time, I suppose.
Until next time.